Hello traders, welcome back to my YouTube channel. In this video, I'll be breaking down a trade setup I took on EUR/USD using an easy ICT buy and buy trading setup that works every time. Welcome back guys to the channel. I know it's been a while I uploaded a video here on YouTube. A lot has been going on right in my own personal life, and I also have things I have to fix up, you get me? So that's me just trying to balance out the external factors and also try to balance out trading for myself. Now if you're new to the channel, all I do on this channel is simplify ICT's concept and also send in a little bit of psychological videos that could help you maintain your psychology as a trader, you get me? So if you're new to the channel, you can check other videos as I've shared simple ICT setups you can use to 10x your trading, you understand me? So if you're new to the channel, do well to subscribe, turn on post notifications so that you don't get to miss video contents like this. Do well to like this video so that YouTube will be able to take this video to other traders as well, you get me? So quick one, the trade idea came in from the 4-hour time frame. Remember, you always want to utilize the higher time frame in order to get a clean direction of what it is the market is trying to tell you. For me, my trading is based on two concepts: directional buyers and entry model, you get me? Once you understand these two concepts, directional buyers and entry model, literally you'll be able to kill the market, you get me? Now directional buyers is just your understanding where the market is most likely going to go to, while entry model or strategy is the tool you use to take your trades in accordance to the directional buyers. Now directional buyers is just you knowing where the market is going to. Now the first thing I had to do was understand my directional buyers. So I came to the 4-hour time frame. Right now I took this trade on the 24th of August. Yeah, it's a long time trade. I wanted to record this for a couple of things, but I still had to record it because it was a clean trade I needed to explain to you guys here, you get me? So I took it on the 24th of August. It was a sell trade. So what did I see on the 24th of August? All this price action wasn't there on the chart. This is where I was on price action when price was basically consolidating. Now you can see very vividly that there was a fair value gap here from the high here to the low of this candle. Remember, a fair value gap is formed by 3 candlesticks: the first one, the second one, and the third one, and the fair value gap is always in between the 3 candlesticks. So the space in between that 3 candlesticks is the fair value gap, right? So from the low of this candle to the high of this candle, that's the fair value gap. So if we are to mark that out, this is how it's going to look like in price action. So you extend that into price, right? On the 23rd, price literally went into that fair value gap, but it wasn't in alignment with my time, so I had to wait to 24th so I can trade the setup perfectly, you get me? So this was the only thing I had to do on the 4-hour time frame. Remember, once price straight into a fair value gap, the very next place you want price to go to is where opposing fair value gaps or area of liquidity, right? Now since EUR/USD was basically trending downwards, I had expected this liquidity, this lower low here, to be grabbed, you understand me? Now in a downtrend, lower lows are being destroyed while lower highs are being maintained, while in an uptrend, higher lows are being maintained while higher highs are being violated, you understand me? So understanding that concept, I went lower to the 1-hour time frame. Now this is the 1-hour time frame. Now this is the 4-hour fair value gap, right? Now what I always do is when I'm in a bigger time frame fair value gap, I try to see if I'm going to find other little gaps inside of that. And as you can see here, this is another gap that was there. I was looking at that gap also, you understand? So then this other gap that was here, I saw this other gap too, right? Now this is one criteria, this is one factor. Price was in this first one, so it's more likely it's going to reverse from there, but that wasn't enough. I started marking out the beginning of Thursday, which is here, the 00 New York time. Remember, my time is always UTC -4 here, that's New York time. So this is the beginning of Thursday. I wanted to see Wednesday, because the strategy that I share here on my channel forms at specific places at specific times, you understand me? It's not just a random strategy. After previous day high has been grabbed, that area after this was previous day high, if I should mark that out, Now this is Wednesday, right? This is the price action that happened on Wednesday, right? Where is the highest point of Wednesday? This here. So you mark that out. So I wanted to see price grab there first. That is the specific area where my setup forms. You get me? So this is one valid point. Now once price grabs the target is going to be previous day low or opposing fair value gaps. So you can always try to take your trades here and try to take out partials when price gets here. Price has grabbed previous day high, and then this is the only thing I needed to do on the 1 hour time frame. Now price grabbed previous day high, and what happened? You see price huge displacement doing what? Breaking market structure. So this is still the entry model, but interpreted on the 1 hour time frame, right? You can just use this model to understand directional bias. It's that simple. So price, remember, it's a storyline. Grab liquidity first, break off market structure, then what do you want to see? A displacement candle with a fair value gap, and as you can see there, that's was the fair value gap there on the 1 hour time frame. But I didn't take my trade on the 1 hour time frame. The trade was basically executed on the 5-minute time frame, right? So this is just to understand my bias. So I will go lower to the 15-minute time frame. Now this is the 15-minute time frame, right? So this was the fair value gap that I marked out on the 1 hour time frame for target purpose. But if you are to refine this will be the fair value gap that you can use for profit target. You can also use your fib tool, right, to mark from the high to the low, and any PD array below 50% of that dealing range, you can choose to take partial profit, right? So here you could take partial profit, here you could take partial profit, and here you could take partial profit. Because of how strong the bearish trend was, I wanted to take my partial profit on this one and then my full TP on previous day low. So back to the entry. Now this is the 15-minute time frame. So if you are to zoom this in properly, so you can see that price grabbed previous day high here. Previous day high was grabbed. After previous day high was grabbed, price broke market structure here. Now remember, this is that 1 hour market structure break here, and it's also a market structure break on the 15-minute. As you can see here too, this is the low that grabbed this high, and then price broke that low and also broke this low too. So this is more like a confirmation, and this is the 1 hour fair value gap, right? And inside that 1 hour fair value gap, we have a 15-minute fair value gap. That gave me an extra confirmation, a fair value gap inside a fair value gap. So I marked that out, and then I waited. You get me? Once price broke here, all this happened during London session. All this happened during London session. And remember, the strategy forms at specific places at specific time. You understand me? So the time here, London session. So you can see it's right inside London session. So price went in there. I set my entry when I saw the fair value gap was formed and price was definitely going back there. So my entry was here, and then my stop loss was here. You get me? So I had to target 1:3. 1:3 was the target, but the full target was basically here. But I took off a whole lot of chunks. 70% of my trades, I took it out from 1:3, right? So that was the trade setup that I took, and this is a very easy setup that I've been sharing, and price has been happening back to back. Another thing I would love to add to you guys is what I call a continuation fair value gap. Immediately the reversal happens, because here is the reversal. Immediately the reversal fair value gap holds price and breaks the next market structure. Always anticipate the next fair value gap to hold price, right? So you may not trust this fair value gap just yet, because I didn't also trust it when I found out that the continuation fair value gap might help me. You want to be using this to manage your trades, to know if this reversal is really going to happen. So if price had broken here, broke market structure, and then violated this fair value gap and started closing bullish, I wouldn't have trusted this setup, but I trusted it very well. You can see that the body of the candles are right inside the fair value gap. It's just the wick. Remember, the body tells the story while the wick does the damage. You get me? So that happened. And then if you want to also see moving downwards, you see this is also the last fair value gap that formed after this one. So you wait for price to come in there, and then you see targets. So that's just how you use FVGs to take your trades. So this was a beautiful trade setup that I took, and I also shared this setup on my Telegram channel. And when I took the trade, it was basically going against me. You remember, it was here, so it was going against me. That's when I shared the trade setup to the Telegram community. Not more like a signal, it's just like I shared it like an entry. You get me? So if I'm to show you that, all right, this was the trade: Euro USD sell, Euro USD sell. So I took it and I sent it to the channel. I was basically in loss at first, Understand? So I was like, let's allow probability do its thing. So you may see that this is me just taking a sell setup. I'm not just giving a direct signal because I don't want to spoon feed you, but seeing this, and someone that's smart enough would have known that I was selling USD here. So you can see the time here, 5:07. You get me? That's New York time. You can see 5:40 price started tanking lower, and as you can see on the 5-minute time frame, this was it. If I had gone to the 5-minute time frame, you see this fair value gap. So that's where I took my trade, right after price broke market structure. This fair value gap, I took the trade there, and you can see price drop, and you can see I added more positions to the trade with the continuation fair value gap. You get me? So yeah, this is just me being sarcastic. You get me? So this is someone on the channel that took the trade also. He sent me his entry, but he got in late. But regardless, since people are now seeing what I'm seeing, I've shared this strategy. You should really get on board. The strategy is very, very effective. You understand me? Join my Telegram channel. That is where all these things is happening. The link is in the description box below. And then this is the trade. And this was the profit that I made on the trade. And then this was the trade entry. Right, this way the trade entry, you can see me stacking them up here, and then this way my take profit. Right, so guys, that was the trade setup that I took on Euro USD, and it's as clean as that, and it's as simple as that. So do well to join my Telegram channel, link below, and make sure if you like this video, make sure you like this video so that YouTube can take it to other people. So until I talk to you guys next time, peace out.